Welcome, financial gladiators, to the ultimate showdown. In today's video, we're diving deep into the world of infinite banking, where you become the bank. But here's the big question. Should you use an indexed universal life, or IUL policy, or whole life insurance to do it? In one corner, we've got the flashy, flexible IUL. In the other corner, the steady and reliable whole life. Who's the real MVP of infinite banking? Stick around because we're breaking it all down, the pros, the cons, the myths, and the numbers. And hey, don't miss the surprise twist at the end. It might just change your strategy. First things first. What's infinite banking? It's a financial strategy where you use a specially designed life insurance policy to build cash value. That cash value can then be borrowed against to fund anything from a car to a business, or even to pay off debt. Think of it as turning your life insurance policy into your personal ATM. But don't get too excited. This isn't free money. It's strategic, disciplined, and frankly kind of genius. And if you play your cards right, it can create a tax-advantage system for growing and accessing wealth. Now, let's meet the contenders. Whole life insurance, the OG of infinite banking. It's known for its guaranteed cash value growth, steady premiums, and rock-solid reliability. Think of it as the tortoise in the race. It's slow and steady, but it gets the job done. Indexed Universal Life, or IUL, the new kid on the block. It's flexible, offers the potential for higher returns by linking cash value growth to a stock market index, and comes with customizable options. But it's also a little more complex. This one's the hare, fast, flashy. But can it keep up long term? Who will win? Let's find out. Here's how they stack up. Whole life. Your premiums are fixed, part of which goes toward building guaranteed cash value. Over time, this cash value grows at a predictable rate, and you can borrow against it whenever you need. It's simple, straightforward, and let's be honest, kind of like the vanilla ice cream of life insurance. Classic and dependable. IUL. Your premiums are flexible, and the cash value growth is tied to a stock market index like the S&P 500. When the market does well, your cash value grows faster. When the market doesn't, your cash value is protected by a floor, usually 0%. It's like having your cake and eating it too, as long as you understand the fine print. Let's weigh the pros and cons. Whole life pros: guaranteed growth, fixed premiums, dividend payouts if you go with a mutual company. Whole life cons: slower cash value growth in the early years, higher premiums compared to IUL. IUL pros: higher potential growth, flexibility in premium payments, protection against market losses. IUL cons: growth isn't guaranteed, fees can be higher and harder to understand. Performance depends on how well the policy is structured. Drumroll please. The winner is neither, and both. It depends on your financial goals, risk tolerance, and how disciplined you are. If you love guarantees and simplicity, whole life might be your best bet. If you're willing to take on more complexity for potentially higher rewards, IUL could be your champ. But here's the kicker. No matter which one you choose, the key to success is proper policy design. Work with an expert who knows infinite banking inside and out. Still unsure? Let's look at real-life examples. Jane used a whole life policy to fund her kids' college education without touching her savings. Mike leveraged his IUL policy to invest in real estate, creating a stream of passive income. Both strategies worked beautifully because they aligned with their goals. The takeaway? It's not just about the product, it's about the plan. Here's your surprise twist. The secret sauce isn't just in picking whole life or IUL, it's in how the policy is structured. You need to minimize the death benefit and maximize the cash value to make infinite banking work. This is where a good financial advisor becomes your MVP. Don't DIY this. It's like trying to fix a car with duct tape. It won't end well. All right, financial warriors, now it's your turn to step into the ring. Which strategy do you think works best for infinite banking, whole life or IUL? Let us know in the comments below. If you learned something new today, hit that like button. It's like giving us a virtual high five. And don't forget to subscribe for more content on building wealth, crushing debt, and creating financial freedom. Oh, and share this video with anyone who needs to hear it. Because the more people who understand infinite banking, the more we can all break free from traditional banking chains. See you in the next video.